right, everybody, welcome back to Cashflow Chronicles. I'm at least 75 to 98.7% certain that Chris Patel is still asleep in some sort of shape or form. I sent him multiple StreamYard links. He's probably either busy at work or doing God knows what. But I figured it's an opportunity for me to hang out with you guys. I want to make sure that we continue the consistency on the Cashflow Chronicles channel. And so I'll just have to take this out of Chris's paycheck. So anyway, I figured instead of having some sort of massive, show or anything like that, we could just talk about stocks, about what's going on in the markets and what's been keeping you guys up at night. The markets are rather crazy, man. Celsius is up, Palantir is up. You have a bunch of different companies that have just been going to the absolute moon. DJT is up. We don't talk about that on the channel. But anyway, it's been a fun week so far. Got a lot done this week as well. But wanted to hop on and make sure that you guys still get at least some sort of show before we kick off within 30 minutes or so, the 10-10 event, which is going to be on my channel. So I might as well for you guys to sync that up and make sure that we have that in the background ready to go, because I'll be going on to my channel and I'll be co-streaming with BD Vince, as some may call him, or actually it's probably just me that calls him BD Vince. But Mr. Vince is bullish, so it'll be fun to be able to hang out with him. He's a previous Tesla bull. I'm sure he's still bullish, but I think I have some questions to ask him, because I think he has definitely focused more so as of late on Palantir. I think he's focused more so as of late on Rocket Lab. And so for those of you guys that are interested, if you haven't hit the bell notification yet, please go ahead and do so, because hit the bell notification for Cashflow Chronicles, because we go live intermittently. We try to do twice a week, if not more. But then if you're clicking on the 10-10 event that I'm going to be starting in about 25 minutes with Vince, hit that bell notification there as well. And the reason why is for any of you guys that are very interested in Rocket Lab. You've heard me talk about it. You haven't done your due diligence as of yet. There's a lot of things that you want to see with the company. You haven't gotten the information that you were expecting out of me. You haven't had the hour-long opportunity to watch the deep dive that I had put onto my channel. There's an opportunity that Bloomberg is going to be live from Rocket Lab headquarters in California tomorrow at about 11 a.m. Eastern time, 8 a.m. Pacific time. And with that, you have Anduril there. You'll have Rocket Lab there. You have another individual there. I forget who the third company is, but it will be very interesting to see how Bloomberg Technology showcases our friends at Rocket Lab. So it'll be very interesting in that respect to see what is going on. So there's a multitude of things that we can do. Just so I have it in the background, I will be pulling up our public portfolio. And so that way I have it in case there's any questions that arise. And it's pretty interesting, right? Like I'm curious to see how the China trades have been. I'm curious to see how the cruise lines have been, just knowing that the cruise lines have been up, and I never doubted Mr. Patel. A lot of people dragging him through the mud on X. And I think it's inappropriate personally. So I've been battling back and forth with some people. They're judging a man by one investment decision he's made, when I think anybody that's listening to this channel right now can say how much Chris Patel has helped them over the past year since we've been doing Cashflow Chronicles. We're on episode 110 or so of Cashflow Chronicles, number 28 or so this particular season, because we haven't taken a break as of yet. We've taken like a week or so break here or there, but we've never taken an extended break since we restarted season 2. And sorry, I'm kind of like filibustering. I'm just grabbing some screenshots of the public portfolio for you guys. And with that, I've been going after some people on X. I think it's fun and games. You want to do a little bit here and there. Oops, I just did the 1 day return. Nobody cares about the 1 day return. But to me, what's most important is showing people how consistent you are over time, and dragging somebody through the mud off of one decision that they made back in 2022 or 2023. It's pretty tough. I'm sure you guys wouldn't want me to drag you through the mud by a single investment you've made. And I think I've made a really good point on one of the posts and the rebuttals that I had. And in fact, maybe I should pull it up, because I thought I was pretty proud of myself. It could be worded more eloquently, and I think we're going to reword this in the future. But I think overall, it's pointing to something that I think a lot of people need to recognize. And here it is. Let me share. So if you guys are looking in the background, sorry, not looking in the background. If you guys are not following me on X, please go ahead and do so. But I just want to make this known, right? Because I think a lot of people get this confused. So investing is an infinite game, always in play, never ends. You only lose if you run out of money or stop playing, which unfortunately I see happen a lot. Some people make one investment, 2 investments, and they stop playing the game. And unfortunately, they screw themselves out of a lifetime of opportunity. I think a lot of people forget it's not a football game, which is finite. 4 quarters, done, designated winner is the one with the highest score at the end of that 4 quarter. So you can lose on one trade and still be a winner in investing overall. And in fact, I think a lot of you guys can probably relate to that. And everyone is kind of dragging somebody through the mud based off of one trade. And I think that's very poor. Very poor character of a lot of those folks that are going ahead and doing that. So anyway, like magic, Mr. Patel.
Dude, had some difficulty signing on. What's going on? What were you talking about?
I was talking about all these haters, man. I know you. Yeah, the Palantir haters, man. I know that you're not addressing it, but I felt like I needed to go after some people. I think they were taking it too far.
Nah, it's all right. It happens, dude. This is one of those times where, in the short term, when things are going against you, you kind of just have to, like, double check your math, double check everything just to clarify yourself and figure out, like, okay, am I missing something? Am I wrong? And the thing is, if you're wrong, you admit it and you move on. Like Nvidia, I said I was wrong. There's plenty of value there. Just that's the thing. Like, if you know you're wrong, you admit it, you move on. Now, the thing is, when people take irrationality as a sign of, like, what's the word? As like a point that, like, oh, see, I was right. It makes you, like, it should make you double check your numbers, right? So when you're down a lot, you should double check your numbers. When you're up a lot, you should double check your numbers. And I just don't see the long-term value, like, especially now, considering where the valuation is now. So the thing is, like, if I know a lot of people right now, they're going and saying, oh, well, look, I ran this DCF model and, it's still undervalued based on that. And I always say, like, based on what expectations? Like, all these DCF models are like, it's like an exercise of,
and you're not talking about just one, you're not talking about one company, you're talking about all companies at this point.
Yeah. And the thing is, like, some people say, like, oh, you have to be a lot more, like, nuanced with a specific company and, a specific thing. You need to, like, not generalize. And I think that's the thing. Like, there was, like, this week, I think Amir and Arnie they went through like some of their stuff with Palantir, and they were like going through what I said about Palantir, and they were kind of dissecting it. And the thing is, I was trying to be just very general, because I think generalization is how you get a broader perspective, and then you kind of work your way into it. And then you go from there. You make your decisions based on that. A lot of times what happens is companies can vastly outperform the thesis in the short term, and I think that sometimes can get you, and it's fine. I mean,
the market, man, the markets can be irrational for longer than you can stay solvent, right? And I think this is one of those cases.
And this is why, like, you just kind of have to like take the hits and move on and say, okay, whatever, it's fine. Like I remember you and me, we both dealt with this with Enphase. Remember, like when Enphase was around 300, it was like, no, Enphase to the moon. And I was like, listen, man, like Enphase.
Yeah, somebody brought that up again today. They're like, man, remember when you guys were hating on Enphase? I'm like, Enphase is still at 100, bro. Like, I'm not trying to be mean. Competition's tough. I mean, I've been looking at solar. I mean, unfortunately, look at what everyone's dealing with in Florida right now. And I'm like, that's the same reason why I'm, power outages, etc. It's the same reason why I was looking at battery cells here in Houston, because I dealt with that in May and June timeframe. I didn't come across Enphase as a suggested offering one time. And I looked for a solid 2 to 3 weeks.
Yeah.
Competition's tough. Anyway.
Yeah. It's all right, man. It happens. Like, so just doubling back, that's the thing. So in the short term, I know a lot of people that were very bullish on Enphase, and all I was trying to just say is like, take a second look, guys. Like, there are certain factors that are giving a lot of people a lot of confidence, but that doesn't mean you should not second check. Double check your numbers, double check how this industry works. Double check how valuations work, and then eventually, things will play out. And like I said, I could be wrong, it could be right, but to me, it's about risk at this point, right? So when it comes down to it, when you're buying a company at such high elevated prices, there's no saying that it can't go higher, because it definitely can go higher. Like I said it on the pod when I was with Amit, it could go to 100 for all I know. The thing is, the risk is just really, really elevated when you have metrics that are so out of spec, and so that's one of those things that you just have to contend with. And I've seen this myself when I was younger, I would be more interested in the thematic part of the investing thing, right? So it's like the theme is what I would look for primarily. But as I get older now, to me, it's like a combination of theme and the numbers. Because if you can get both done, then it makes a lot more sense to be in the play and in the company and stuff. And the thing is, like, some people are saying, oh, look, you missed out on a 5-bagger and all that stuff. Like, yeah, I kind of did a little bit more than that, but okay. Like, and the thing is, I feel happy because I did it without the risk. Like, I did it literally without the risk. So I think what it is some people saying, look, I won. And I was like, that's like the same person that says, see, I went to Vegas. I made money on slot machines. And like, you're stupid because you only played the craps table and you didn't win, nearly as much. And it's like, yeah, but the thing is, like, you were playing at very really bad odds and you got lucky, and that really worked out in your favor, but the thing is, like, over a long period of time, things are going to get proven out the other way, but in the short term, it's fine. And so I am happy for all you people that are in Palantir. You made a lot of money. Just double check your thesis, double check, like, okay, what is the real value of this company? How much is the revenue actually going towards, me as a shareholder, and not to employee compensation, right? Or executive compensation. Yeah. Why are insiders selling at the pace that they're selling? Like, when you have some of the largest holders in the company that are exercising options that expire in 2030, they're exercising them now. And not only are they exercising them now, they're giving up 6 years worth of additional alpha, potential gains. Why are they doing it now? Like, and I think it's best to just do an exercise on this and just check it out. Like, let me just show you guys what I mean by this. Okay. And this is not to say the Palantir is a bad company. This is just saying this is the kind of questions that we should all be asking ourselves. So if you go to like, let's do FinViz. So if you go to FinViz and you can check out the insider trading on here, right? So one of the things about Palantir that you can see here is that a lot of people are selling a lot of a lot of stock, right? And it's not just Alex Karp, but you have like independent directors selling a ton of shares. Like, let's take a look at a recent one. So Ryan Taylor just has an options exercise. So let me just pull up the SEC form, right? So, okay. So this is Ryan Taylor. He's one of the executives on the Palantir board, right? If you look at this, he has employee stock options that expire in 2030, okay? In June of 2030. That's when that stock option expires. He exercised it, right? And he exercised it and basically paid Palantir, the company, $4.72, and then immediately in the market sold it for 40. Okay. So the thing is, if he wanted to, he could just hold this. He could just hold this for a prolonged period of time. Doesn't have to pay taxes on it. No, nothing. It's just a stock option, right? Some people will say, well, you know what? He had to do it because of a 10B5 plan. Well, if you look at right here, this is related to a 10B5 plan that was basically entered into in March of 2024. These 10B5 plans are meant to basically prevent insider trading. So it almost looks like, well, this was a scheduled sale, right? That's the narrative behind a lot of these 10B plans. But 10B plans can be manipulated a lot because you can change these 10B plans with a 60 to 90 day cooling off period. So basically, all you have to do is say, you know what? I plan on exercising this option 6 months from now, right? And not even 6, like 90 days from now, and it automatically will execute at the broker level, and the broker will do all the buying and selling for you, and it doesn't look like you're doing any insider trading, right? So if you go here, there's actually cases of 10B5 plan abuse that have been coming out recently, where basically insiders, what they'll do is they'll craft 10B5 plans, and what they'll do is they'll keep changing them with a minor cooling off period, so it doesn't look like they're doing insider trading. But essentially, when you see all these sales, it should still ring up in anyone's mind, like, why are insiders selling at the pace that they're selling? And the thing is, not only are they selling, which is I wouldn't say a problem, but that's one of the things that you're having, but you're also at a point where they're taking their ownership stake down significantly, right? So if you think about like all these other guys like Bezos and Zuckerberg and everything, yeah, they sell in the open market. There's no question about that, but they don't diminish their ownership level to that degree that some of these executives at Palantir are doing. And then on top of it, you look at other examples like Larry Ellison. Larry Ellison isn't selling shares. The guy is basically, his ownership is rising.
Yeah, it's massive within Oracle because he's buying back so much. So yeah, I mean, I hear you, man. I think it's time to move on. I think TJ said it appropriately, man. Like, somebody could be, and this is something that we got slacks. People are like, oh, you need to change your content style, and I'm like, dude, like, we help provide people the education and at least fortitude to be able to understand what they're investing in and why. We're not sitting here being like, you guys need to go full port NEXT, Tesla, this, that, and the other. We say, look, if this is something that fits in your wheelhouse, and to be very fair, a lot of people sit in the chat and they actually go through the exercise that we talk about all the time, and they're like, might be a little bit too risky for me. I'm not getting involved in that one. And I applaud a lot of the people that come into our chat and talk to us, and they say, you know, I didn't get in that one. You know, it wasn't for me. And it just goes to show exactly what TJ said. Anybody can make money in the market, and very much this depends on your personal portfolio style. We could have a 75-year-old man coming in here, and he might have gotten some windfall from somewhere, some accident, or maybe he just worked really hard and saved in cash his entire life. And he says, you know what, I need a little bit of income. We're not going to be sitting here telling him to get an NEXT. We're not going to be sitting here telling him to get, you know, we're going to tell him to get into some sort of cash flow machine, whether that's dividend income, closed-end ETFs, short-term treasuries. We're going to talk to him in a completely different manner. There's no one-size-fits-all way to win in the stock market. That's why everyone's so confused. That's why everyone's in this chat to begin with. It's because not everyone's confused. Everyone doesn't know. Not everybody knows everything. So anyway, it's just a lot of fun. Curious, 151 of you in the call. Thank you for being here. We're about to head over to the 10-10 event, which I'm kicking off in like 10 to 15 minutes on my channel. Mr. Patel, anything particular in the market this week that you wanted to talk about? We had the DOJ, talk about Google. We had a billion different things. Everything seems to be going up. Palantir seems to be going up. Celsius seems to be going up. DJT. It feels weird. Joseph Carlson said it feels weird. I think it feels weird. Do you think that this is just excess capital on the sidelines entering the market, knowing that there's no more easy money? Where the hell is all this capital coming from? I don't understand why we're still pushing all-time highs. I feel uneasy. I want to hear your thoughts.
It's probably a combination of a couple of things. One, people might be front running some of the more, what is that thing called? Some of the more like Santa Claus rally expectations. That could be one thing. There's a lot of money sitting on the sidelines as well. So I think what it is people may say, you know what, this is when I want to be in this. I want to get in. And I think what happens, there's like a delayed and lag effect of people becoming aware that they can become wealthy using the stock market. And so you usually have these cycles, and it works its way in and out, where basically when things are riding up, everyone kind of like FOMOs in. And then when things are going down, everyone sells off, and then they stay out of the market for like 6, 9, 12, maybe even a couple of years. And then what happens is they hear from their neighbor, like, oh my God, I did so good on this one stock. And it's like, okay, well, maybe I need to dip my toes in again. And it just, cascades back in again. That could be one reason. Expectations of rate cuts, so a lot of people might be front running those. So I mean, I don't necessarily think it's a bad thing. I do think from a risk perspective, you're buying even the S&P 500 at pretty significant highs. So
Right.
just be mindful of that, and invest accordingly, where this is not the time where I would want to take a ton of options risk. Like
Yeah.
the time where you take options risk and you want to like leverage up your positions is when things are at the bleakest, right? Like when things are absolutely crushed, that's like, okay, now it's time to go in heavy with options. Right now, may not be that time. And yeah, and just find value where others don't see it. Like for me right now, I see China. Like China is like the play that I would probably like really highlight as a place that people are not looking at. Like you look at some of the companies that are in the Chinese index, dude, they're trading at like 4-5 PE with a 7% dividend. Like it's
what's
crazy.
Baba? I know
Yeah.
I know Stephen Fiorillo's Baba article went off the chain in terms of like comments and stuff like that. I still need to read it. What's Baba looking like? Because I'm a holder of Baba. I've been bag holding it for quite some time. Is that as well valued as a lot of these other things, or?
Well, the thing is with Baba, it definitely bottomed out in the 70s and 80s.
Mm-hmm.
But more importantly, the risk with regards to like Baba in terms of like the government risk is starting to come down significantly. So one of the reasons why Alibaba got sold off significantly is because they had a lot of government oversight come their way.
Yeah, people were wondering where Jack Ma was.
Right. So when Jack Ma disappeared and all this other stuff, people really like, oh my God, like what the hell is happening here? And so they got a little bit, nervous by that. And so one of the things is if you do the research, the country itself, the economy is becoming a little bit more liberalized. It's becoming a little bit more consumer focused now. So Baba being in the consumer segment with a primary, domestic market share, they're going to do well. Same thing with companies like Pinduoduo and JD.com. I mean, people forget that China is the second largest economy on the planet. All right.
Growing quickly.
If you look at their even per capita GDP, their per capita GDP is starting to get like more middle income around the world kind of like GDPs. Now, why is that important? Well, the thing is that means that now the Chinese consumer has more buying power. Another factor to consider also is that Chinese like savers, just based on everything that happened in the last 2, 3, maybe even 5 years, their savings rate is enormous. Like the Chinese consumers are flush with cash. People people don't know this, but there's $40 trillion in Chinese deposits right now, bank deposits, not Chinese yuan, tiny dollars, like US dollars, 44 trillion US dollars in the consumer's pocket right now in China. So if the government is able to stoke demand and ignite the fire of consumption in that country, it could do like the companies that operate in that segment can do very well.
Yeah.
So if you want to look up, if you want to just look up like Chinese bank deposit rate, you'll see like it's astronomical.
Yeah.
So
Yeah, there's definitely opportunity there. And you can see that that's interest rates. Yeah, I mean, you can see the GDP is catching up. I mean, I think by 2030, 2035, they expect them to surpass the US. And who's to say whether or not that's true? I guess we'll find out in 5 to 10 years, but they're continuing to grow at a pretty massive rate. They have 3 to 4 times the population. It's
I
pretty
will
insane.
say they do have some challenges from like a demographics perspective, because demographically, because of the one child policy, their population is aging, right? So that's a challenge for them. The other thing is they don't have nearly the amount of social safety nets that we do. And it's funny because a country that's socialist doesn't have the social safety nets that like the Western world does, So
Yeah.
it's kind of interesting to look at, but there's definitely value there that people may not be understanding right this moment. But I'd say give it a couple of years, and I wouldn't say go heavy on it and be like, okay, go full port China, because it's probably not the way you want to go. And so if you look at our portfolio right now, the way that we've structured it is that we're being opportunistic with the sectors that we really like, that we feel that are undervalued. Some of them are really doing well in terms of performance, but we're building positions where we see it and we're trimming positions where we don't. So, overall our investing style is doing well, so.
Yeah. I do want to give a shout out to the 1010 event. So we will be moving over to the Matty Mulat channel. So I put the link in the description, or sorry, not the description, the chat box for you guys. So I'd say let's run through the public portfolio really quick and what we're up year to date. We had a nice another round number. Well, maybe not round, but it's got a 5 in it. So it's nice to see. Mr. Patel, you're more than welcome to join us for 1010 on Matt Money. I know Vince is going to stream it on his channel as well, but don't feel obligated.
Nah, man, I'm gonna just privately watch it. I think it's a robo-taxi event. No, it's a robo-taxi event. I'll be curious to see what the robo-taxi looks like.
I want to say something about the portfolio, which I was not expecting to see today when I pulled this up. Look what our number 2 is.
NEXT.
Yeah. I was pretty surprised. I mean, I knew we built a position, but I guess I closed my eyes and it rebounded a little bit. Obviously, we're like 5.25 versus like the 450, 460 when we were kind of picking it up. So nice to see that we're finally, our cost basis is kind of broken even. So we're about flat. But overall, I think the portfolios continue to do well. We're almost at $5,200. We're halfway through October. We're trending well for income coming in. Shout out to the 170 people that are here live in the chat right now. I think this is probably the most we've had on average in quite some time. So shout out to us. But BPYPM, that's showing really good gains. We have HIMS showing at 33%. The cruise lines, man, mid-30s. That's insanity. And then you have some of the other positions, BPYPM, Vornado is hanging in there. That's mostly a dividend. And I feel like there's another leg up to be with a lot of these preferreds. If interest rates go the other way starting in November, they could see another 5-10% increase in a lot of these. Right now, I think they're going to hang out in stalwart,
Yeah, I think so too. I think they're going to hang out. The question that, I'll have to double check on Celsius, because Celsius has been making a run. And the thing is, I don't want to chase a run, of course, but at the same time, I have to look at this from the perspective of what is changing fundamentally with one sentiment with the consumer. Because I think there was a consumer report that came out that said that Celsius was what is that thing called? That was like a favored brand among some of the younger
I think it
people.
was that. I mean, I don't think the thesis has really changed. I think what happened was the sentiment. I think Pepsi got bullish. They bought a lot.
Yeah,
They got a lot of inventory. They said, in the middle of this year, they were sitting on it, and then the Pepsi earnings came out, and they talked really nicely about it. They said, "We love the partnership. We're continuing to see the love for it. We think the consumers are loving it. We're looking to see how we can continue to grow." So
yeah.
for me, I think it's I don't it was a matter of time. Do I think it's worth $80 a share right now? No, but I didn't
Mhm.
understand why it was sitting below $40. I can understand why it's sitting below 50, and that's when I started writing some puts, and I've been able to roll out and down. And but to be honest with you, I have I don't know if it's like 5 or 6 contracts that I wrote where they're all in the money. I might just let them expire, to be honest. And a lot of
Their
that cost basis.
puts are call. Puts are calls.
No, they're puts. I have one long call for 2026 or 27, but it's just
Okay.
one. It was like 35. So, which that's sitting up pretty nicely today.
Yeah.
So, um, but anyway, what do you think
Yeah.
we're up total portfolio?
Probably the same thing as yesterday because I just saw the bottom. It didn't move very much, so I don't think it's very much.
65, almost 66.
Good.
So almost 3 times the S&P.
Yeah. Yeah.
So
I mean, and we did it without using leverage. So that's one of the things that that's actually really good. Like when you're able to get that kind of return without using leverage, that's when you can tell that you're a good capital allocator. I mean,
yeah,
it's one thing to get that kind of return, but you're using massive amounts of leverage to basically juice up your returns. But if you're not using leverage and you're still able to pull off a good size return, that speaks volumes. But then are also, we have to admit one thing: we did get in at a time when the market was absolutely down. So we started
yeah.
this
The
in
market definitely
October of last
helped.
year. We
The
started this
market definitely helped.
yeah, we started this in October of last year, like this time, right around this time, maybe not like exactly there. So we benefited from an oversold market. So one of the things that we always should look at from not just from a reputational standpoint, is when did you start your positions? Now, the thing is, I would say that we're one of the great good things about our portfolios, like allocations and all this stuff, is that we've done what you're supposed to do. When things get oversold, you hit hard. And when
Mhm.
things get overbought, you take a little bit off the top. So that this way you're not sitting in dead money stocks for a long period of time. And you just keep investing in the higher conviction plays and just let them play out.
Yeah.
So
It'll
yeah.
be fun, man. It's been a lot of fun so far. I'm looking to see how we can take it. I'm honestly quite surprised we already made it to 5 grand. I think we did accelerate some of the stuff though. I think I put a couple hundred, you put a couple hundred. So,
Yeah.
but it's really going to be a lot of fun. I mean, we're continuing to build a great audience, and that's going to be able to help us contribute. And eventually, at some point, I would love to start doing giveaways, but it's not at the point yet where I think we can do that. Eventually,
Yeah.
eventually.
Yeah.
All right, my man.
Yeah.
Well, good to check in with you. Appreciate you coming on a little earlier. I know that probably woke you up from a slumber.
It's
Um,
okay. Here's
yeah,
a question. What do you think about what's going to happen with Tesla?
I don't know,
Tesla's
man.
event.
I'm hoping. I don't really watch a lot of these because most of the time when they happen, I'm either busy doing something else or I'm uh I'm at work. So I'm actually kind of curious. Everyone's been hyping it up so much since it was supposed to happen in August, right? That I'm really very curious to see what ends up happening. And at the end of the day, I'm hoping that eventually I can get steered because I want to see everyone win. I want to see all these people that are investing in Tesla win. I'm not somebody that's sitting here trying to be a troll that says I want everyone to fail. I know a lot of people in the chat have Tesla. Tevis has Tesla. I know that Vince has had Tesla in the past. I don't know if you still do or if you ever did. I know that you
No,
were
I
looking
did.
at
I did. I
one.
saw I sold a little. Like for me, I've used it as a trading stock. So when it gets oversold, right, I usually tend to buy a little bit of it, and then when it gets overbought, then I usually just sell a little. You
Yeah,
know?
it never hit my price target. Like, what was it? Close to maybe 6 months to a year ago. I wanted it to get to 150, and you and I were talking about it, and it dipped. And then, what always happens is you turn your head and cough, and Tesla bumps up back to like 170 or 180, and you
Yeah.
lose it. And then it's been on a great tear ever since. But
The thing with it is that it's the stock is primarily driven by sentiment more than fundamentals, because fundamentals are weakening, but the sentiment is upbeat, right? So
Right.
usually that disconnect is there. So you have to just, once again, you play a little bit of intellectual honesty with yourselves and just ask yourself, like, okay, like what is actually going on here? So like, let me just quickly show you guys what I mean. One second. So let's go to. So if you look at Tesla, the company and its stock has been, pretty flat, I would say, since the top over in 2021. The financials are starting to kind of catch up, but if you see the revenue growth at the top line, it's been shrinking pretty significantly, year over
Yeah.
year. And the thing is, even from an operating income perspective and a net income, you can see that net income is starting to kind of come down on a trailing basis. You've got operating income doing the same exact thing. You've got it coming down. So typically, when you have like this happen, the company's stock should be going down, not staying flat. So, but the thing is, like I said, Tesla does not run on, it does not run on
Valuation. It runs,
valuation. It
it's
runs on
sentiment.
sentiment.
Then you try to
Yeah.
tell people about how the fact that the margins are being squeezed and they're in complete denial. It's like it gets you back to, knowing the numbers, right? And it's not to say that
Yeah.
means that Tesla's going down, but at least a risk that people need to be aware of, right? And I don't think a lot of people they're so much involved in the future, and it's like I get it, but the future doesn't always pan out, and companies take wild bets, and sometimes it takes years, if not decades, for some of these things to pan out. So
I mean, you look at this, it's free cash flow was almost 9 billion and now it's like 1.7. So, I mean, they are committing a lot of capital towards expansion. So like look at this, like 9 billion a year right now in capex. So their capex spend is just absolutely wild. But that's good. That means that they're reinvesting in their business. So you have to give them credit for that. They're always building new factories, they're always building new like new supply chains and all this other stuff. So the company continues to invest in itself, which is always a good sign. The only thing is from just operating metrics, it's something to be, just keep in mind. Yeah. So, but one good thing is, if you believe in number one, I honestly believe like Elon Musk is one of those like, what's the word? He's like a CEO that actually like talks to
Mr. Patel, if you want to keep talking about this, let's hop over to the
no.
other stream.
Yeah, no, you enjoy it, man. I'll talk to you later.
He's too cool for 1010. All right, Mr.
No,
Patel.
I want to just chill and watch this quiet.
You deserve it. Yeah. Thank you for hopping on for a minute. Talk to you soon.
Take care, guys.
All right, everybody. I'll hop on. The link is in the description. Actually, it's in the chat box. I'm gonna put it here for you guys. I'll see you guys over there. See you then. Thank you for 170 you guys hanging out. Best stream so far that we've had on Cashflow Chronicles. Thank you.